All right, welcome back. The bar, it's been set pretty high after Microsoft and Meta reported yesterday afternoon. Tonight or this afternoon, we get Amazon and Apple, and they announce their earnings after the market closes today. Amazon, it's been a high flyer, while Apple's kind of been floundering, setting up for one of the most tense days of the earnings season. That'll be today after the close. It's going to be interesting. Now, the markets have taken many stocks to the proverbial wood chipper for missing this quarter. Such an event applied to either or both of these stocks, that could be a market mover. Amazon and Apple follow the closing bell, and their paths to the point in 2025, they have been decidedly different. Amazon, well, that soared back to a near all-time high, wiping away the tough spring market swoon. Remember Liberation Day. But Apple, however, that goes into this announcement Thursday, trading just below where it did a year ago. It's a tale of two cities, with the Fed's inflation indicator coming in a tad hotter and Microsoft and Meta doing well yesterday. What's next for the overall market? Well, we know just who to ask that question to. Please welcome into the show, Mr. Eddie Ghabour. Eddie, thanks for being on. We were talking off air. Seems just a little tired, a little heavy. What do you think?
It does. It wouldn't surprise us to see a pullback. August is usually a weak month anyway. And when you look at what we've had, this run we've had, which has been amazing, and we're thankful we've been long the whole time, we're due for a breather. And we look at the advanced declines. They were not good yesterday. And even today, when the two major stocks after earnings, Meta and Microsoft, were ripping, there are a lot of areas still in the red. So I would expect a pullback. I don't think it'll be steep, but I think you'll also see that pullback get aggressively bought. But I wouldn't be too aggressive buying today if you've been in this market, because I think August could be a little bit choppy.
I saw a good headline. Microsoft and Meta are ripping. Rest of the market is RIPing, which I thought was pretty good. And so tonight we'll get these next two big ones. They're going to be bellwethers, obviously. Any thoughts on, Amazon versus Apple? Apple, I guess, like I said, to tale of two cities. What are your thoughts? I think you said over the break you'd still be a buyer?
I would. We own Amazon in our tactical strategy because we bought it because we felt like they were being punished unfairly due to tariffs. And kind of overlooking their AI side of their business and the other parts of their business. So I think they have a lot of catching up to do because they've been one of the worst performers of the Mag 7. They've already started to catch a bid. And so I expect it to be very positive today after the bell. In regards to Apple, it's interesting. We look at Apple as a defensive play. We say that's really the consumer staples of the Mag 7. And if we get a choppy August and September, which is what we expect, you could see some money flows go into Apple as a defensive play. So there's a lot of bad news baked into Apple's earnings because of them being so far behind on their AI spend. But if you don't own that position now, if you got the right risk tolerance, I would have no issue with putting my foot in the water right now and starting a position in Apple and keep dollar cost averaging into it over the next couple of months.
All right, okay. I would be remiss if I didn't ask you about PCE. We had that come out today, just a tad hotter than expected. I would say no great shakes. I think the market's comfortable with it, but I'd like to hear what you have to say.
The market is comfortable with it, and the people that have to get comfortable with it is the Fed. The Fed is going to have to change their target. If they continue to wait for 2%, frankly, to be blunt, they're going to have to cause a recession to get to 2%. I think we just have to come to grips that 3% is going to be the new normal. And it's okay, because if we're growing the way that we're growing, the economy accelerates, sitting there and beating your head against the table waiting for 2%, that's not going to happen. They need to have the humility to pivot and change their guidelines for what they're looking for on the inflation side. Because if not, they're just not going to be cutting rates anytime soon.
Yeah, if they go to 3.5, I think the market would love that if they heard that, number one. The other one is tomorrow, Friday, first of the month. I think we get non-farm tomorrow, don't we?
Yeah, we do. And, the bond market is something that I think you're going to want to pay very close attention to. It looks like the 10-year has come in a little bit today. But that bond market and the dollar, those are the most two critical things that we're watching at this juncture right now.
I agree.
And the dollar strength on top of everything else we just talked about here is another reason why I think, as you said, that we are probably toppy right here and due for a little bit of a breather. So if we get a hawkish number tomorrow, you're going to see bonds can rip to the upside and maybe cause some pressure here on equities. But look, the bull case is still extremely intact over the next 6 to 12 months. There's just a little bit of an air pocket here that we're going to navigate for our clients in the August-September time period.
Yeah, I mean, and it's one of those things that's healthy for the market. I know people don't like it when you talk like that, but that's still going to be the case. And if you've got some capital, and hopefully you do, take some winners off the table and maybe have something there, some dry powder, because you're going to probably get the chance to get some stuff at better prices. That 10-year yield, 430 to 450 for, it seems like forever. But your worry is that if we do spike above 450, that puts us back to like 1995-ish. I think we still could do okay equity-wise, but it might throw a little bit of a wrench in the works.
Yeah, and it's at the path of how it gets there. If it gets there really fast, that's when you get those knee-jerk reactions in the market. But I think the economy and the market is strong enough to be able to handle that, to your point. Now, over the next few years, if we start getting closer to that 5% number, psychologically, the market's not going to like that. I don't see that as a risk this year. But that is something I think structurally that we're going to be higher for longer, just due to how everything is set up here from an inflationary perspective.
I totally agree with you, brother. And thanks for coming on. Awesome to have you, Eddie Ghabour. Can't wait to hear what you have to say next week. Key advisors coming to us from Delaware.